Hello everybody, Ignatius L. Jackson CPA here. Hope everybody's doing as good as they can during these times. Wanted to update you on a couple of recent events that have transpired and give you kind of the latest and greatest on everything except for the CARES Act, which was just passed last Friday. Still diving into that, still trying to get a full understanding of that. We might touch on a couple things throughout this video, but for the most part, a lot of that will be covered later on. So bear with us. We're still waiting on official guidance from the regulators as well in terms of how everything's going to work. And so once we have that additional information, we'll do another video, more comprehensive video on the CARES Act. So bear with us on that. But just wanted to cover a few important updates. So tax filing and tax payment deadline has been extended to July 15th. As I mentioned previously, so don't have to worry about rushing to get your returns done by April 15th. It still only covers returns and payments that are due by April 15th. So for example, estimated tax payments and income tax return payments due April 15th. Those are the only ones that are extended at this point. If you have any other payments that are becoming due, you do have to make those. So plan on making those. What that essentially means is there's no penalties or interest on late payment or late filing as there normally would be. There's no limit anymore on how much the payment can be that will be deferred. So it used to be that there was a limit on those. They took away that limit. And so you now have unlimited use of the tax filing and tax payment extension for corporations and individuals. It does also cover self-employment estimated taxes. So if you have self-employment taxes that you normally would pay, then those are also eligible for the extension. So you don't have to worry about those. But it does not cover payroll tax payments. So if you still owe payroll tax payments and you're an employer with employees, including if you are S Corp with the shareholder employee, then you are still required to make those payroll tax payments by the original due date, which could be semi-monthly, quarterly, or monthly, depending on how your payroll taxes are set up. So definitely still make those payments on time. At this time, S corporations and partnerships did not get any reprieve. Those returns were typically due March 15th, and so if you miss that deadline, chances are you will still have some penalties associated with that. So recommend you get those filed as soon as possible. As long as you filed an extension, you have until September 15th to file those returns. There are some provisions under the CARES Act that might help out with some of the payroll tax payments starting in Q2 of 2020. So anything that's related to Q1 of 2020, which is coming to an end here tomorrow, you still do have to make those payments. So don't plan on getting some kind of relief for Q1 2020. All of the relief that's under the acts that have recently implemented are taking effect starting Q2 of 2020, okay? Which we will definitely cover in more detail when we do our updated video on the CARES Act and some of those other relief provisions. If you believe you are owed a refund, we still recommend that you file your taxes as soon as possible, as the IRS is still processing refunds, okay? The Department of Education came out actually recently and said they won't even be taking your past due loan payments from your refunds anymore for the next few months, okay? So that's definitely a good benefit, and so go ahead and file those returns if you're owed a refund, even if you owe some back student loan payments where they have historically maybe taken your tax refund from those, okay? Many states have taken actions to extend their filing and payment deadlines as well, so check with your particular state to see if you have some sort of reprieve from the state. If for some reason the state doesn't do that, then you still do have to file for that particular state. So we're hoping that most states, if not all the states, hopefully will go ahead and extend their deadline to match the federal deadline. The IRS also announced that you can actually take until July 15th to pay any IRA contributions, health savings account contributions, and employer contributions for deferred compensation arrangement plans like 401ks or SEP IRAs. Definitely recommend you take advantage of that, and gives you a little bit more time to make those contributions count towards 2019 tax year, and which in some cases can reduce your taxable income for that year. So no need to rush to make those at this point. You do have a little extra time to make those contributions. That was great news when we heard that. A lot of accountants were very happy with that one. Effective April 1, 2020, the IRS will also be postponing most collection efforts through July 15th of 2020. That includes installment payments, offers and compromise payments, levies, liens, etc. So they're giving you a little bit of a reprieve for making those payments and collecting on past due taxes. That's another great item that we thought was great. A lot of accountants did when they decided to go ahead and postpone the collection of some of those items. They will still be enforcing those items, though, if the statute of limitations will be running out during that time period. So if for some reason the statute of limitations is really near completion, they have no choice but to continue to do that to protect their interests in that debt or in that filing or whatever the case might be that they're looking for. Okay. You can look at IRS News Release 2020-59 for all the information related to the postponement of collection efforts by the IRS. Families First Coronavirus Response Act includes both the Emergency Paid Sick Leave Act and the Emergency Family and Medical Leave Expansion Act. So you may have heard about this. Those two acts basically cover employers, private employers with less than 500 employees. Okay, so if you have less than 500 employees, you're required to comply with these acts. These are both mandatory. Okay, so I'll explain a little bit about what those entail, but there's a lot of details behind them that you should probably talk with your accountant to make sure you fully understand what the requirements are. Emergency Paid Sick Leave Act is effective April 1st of 2020 and is through December 31st of 2020 and requires employers to pay up to 80 hours of sick leave for employees impacted by the coronavirus for a number of reasons, including being quarantined or caring for a child whose school was closed and there's no child care available. The amount allowable varies depending on facts, but can be up to $511 per day for 10 days. Okay, so definitely recommend, if you have any employees that meet that qualification, that you speak with your accountant and make sure you're covering the rules, accountant/lawyer, I should say, to make sure that you're covering those rules correctly. The Expanded Family and Medical Leave Act is effective also April 1st, 2020 through December 31st, 2020, and all employees employed at least 30 calendar days are covered under this act. It requires employers to pay 2/3 of an employee's regular rate of pay for the hours they have been normally scheduled for up to 10 weeks. The only qualifier for this one is if the employee has to care for a child whose school or child care provider is closed and they can't do telework or work from home or whatever the case might be. That's the only requirement that covers the additional 10 weeks of pay. And again, both of those items are mandatory, and they're only eligible if the employer does not close the work site. The employer does close the work site or office due to a lack of business or because it is required to based on a federal, state, or local directive. Okay, so for example, in Arizona, they just issued today a directive for stay at home unless you're an essential business. Okay, so look at the list of what essential businesses are. If you're on that list and your business is covered by that, then you can continue to operate. Otherwise, you'd probably be qualified under one of these acts to pay your employees for that time. Okay. The amounts paid, in essence, directly reduce the amount of payroll taxes. So you get a tax credit, 100% tax credit for complying with those two acts. Okay, so what that means is on your payroll tax form at the end of the quarter, you could even do it real time if you work with your payroll provider to where they don't even deposit the money. You basically claim the credit on the form. On that form, the credit will then basically wipe out the related payroll taxes that are covered under this, and it allows you to essentially reduce your overall liability for payroll taxes. It is even refundable, so if you don't have enough payroll taxes to cover this payment, it is also refundable, so they'll send you a refund on that. If the employee has any overtime hours that they normally work, those are required to be included in your calculation of how much pay to give them. up to the maximum allowed under each act. If the employee chooses, they can also utilize existing paid leave and sick leave policies. So you can't force the employee to do paid leave or sick leave, unfortunately. You do have to allow them to kind of choose which one they want to use. For example, if their normal pay is greater than what they are allowed under the act, they can take basically the sick leave to cover up to their normal pay, for example. So let's say the Sick Pay Act only covers $511 per day, but there usually we get $1,000 per day. You're still kind of responsible for paying that difference if they choose to take that during that time period. Okay. If you have less than 50 employees, you are able to apply for an exception, essentially, which will be detailed later on. We don't have all the details on how to do that yet, but there is going to be an exception that will be allowed if you have less than 50 employees, and it will cause essentially a detriment to your business to where you wouldn't be able to operate in the future if you had to comply with the provision of the standard. So once we get those regulations, which hopefully will be by the time we do my next video, I'll try to cover those as well in terms of what qualifies under that exception. Self-employed individuals that otherwise would have qualified for either of those acts are covered under those acts for purposes of those acts. So if you own your own business and you get sick with the coronavirus and you can't work anymore, then you are covered under those provisions, and you can get up to those maximums based off of your self-employment earnings that you normally would make. Okay, so definitely look into that. I just wanted to let you guys know that everybody is covered, whether you're independent contractor, self-employed, an actual employee. Everybody's covered under that as long as the employer stays open for business is kind of the key qualifier there. Small business disaster relief loans. One of the things I forgot to mention on the last subject is unemployment benefits. If you do have, if you are basically furloughed or terminated from your employer because they have to shut down or under one of those cover reasons, you can still apply for unemployment insurance, and highly recommended. There's actually some additional enhancers that are in the CARES Act that we'll be covering in our next video related to unemployment insurance, and so highly recommend that you still apply for unemployment insurance right away. There's actually no waiting period anymore under the CARES Act as well, so there's a lot of things that have came out. So if you get terminated or furloughed, apply for the unemployment insurance essentially the next day to make sure you cover yourself. Small business disaster relief loans. Okay, so this one came out I believe a couple weeks ago, where you can go and apply for a small business disaster relief loan. These are credit worthy type loans, so you do have to qualify for them. You have to have the ability essentially to repay, but the government essentially is guaranteeing the loan for businesses, and the intention is to cover your payroll costs, mortgages for the business, rent, utilities, so you don't, and other obligations, so you don't have to stop paying your people and take care of your obligations so the business isn't detrimentally hurt. You do have to pay back the money though, so it's not free money on the small business disaster relief loans. You do have to pay it back with interest. There are some provisions underneath the CARES Act that will allow up to $10,000 of that loan to be given to you in advance within 3 days of applying for it. Okay, so and basically that portion of the loan is essentially a grant, so you don't have to ever pay it back, and it's also not includable in your income. So that's a very beneficial provision that's in the CARES Act, and we'll definitely cover that a little bit more next week as well. And then there's also another loan under the CARES Act that will potentially interact with this one. And so I guess the one word of caution I would say is just kind of think about all the various provisions under here. You can't double dip. So there's a lot of things that you've been hearing about out there in the space. You can't double dip, so you kind of have to pick and choose which ones make the most sense in some cases. Some cases you can do multiple, but it decreases the benefit you can get under the other. So just some other things to think about is which one to kind of go for and qualify for. overall, this was kind of a high-level summary of the requirements, and so definitely work with your accountant, payroll processor, lawyer, etc., to make sure you fully understand all the requirements and you implement it correctly. If you're out there applying for things, definitely work with those guys to help you through that process as well. We will definitely discuss the CARES Act in more detail next week. Maybe even before that, just depends on when we have some more official guidance come out, because I want to make sure we give you the most accurate information possible, instead of just some interpretations and things of that nature that are maybe out there circulating in the media. So be cautious about what you read in the media. It's not always 100% correct. There could be some things that are misstated, and so usually when I tell you information, it's information that's been confirmed by either the IRS or some other regulator out there, by some memorandum or something that they've issued. And so you can feel a little more comfortable that chances are, if I'm mentioning it to you, it's probably going to be, it usually is factual, excuse me, not probably, it usually is factual. So unless they change it. So, I mean, things are constantly changing and evolving. So we do have to kind of stay up to date and stay abreast of all the changes and everything that are out there. If you have any questions, comments, or concerns, feel free to leave a comment in the video. If you have any other questions or anything like that, you can give us a call. If you have a personal question where you don't want to necessarily leave a comment, feel free to give us a call or shoot us an email, and we'll get back to you as soon as possible. Obviously, we are still working. We are still trying to get things done for our clients, and so it does require us to prioritize everything, and so it may take us a little bit longer to get back to you from time to time, but we will definitely get back to you and make sure that we take care of you, as all of our clients and anyone else who might just have some questions and want to get those answers. So hope everybody has a good day. Thank you for listening to this video, and we'll talk to you again soon. Bye.